Whether you're trading Fibonacci style, whether you're trading support resistance style, whether you're trading supply and demand style, whatever it is, you're waiting for a discounted price. You need to be very, very careful on where you're getting your education from. Where do I need to position myself to make the most amount of money? I'm about to blow your minds in the next 5 seconds. What are some of the issues when it comes to when this picture is shown to us of this is the future, this is what you're gonna do, this is how you're going to grow in life, and then you come to join it and you start to realize this is a lot harder than I thought it would be. So what I'm going to do in this webinar, I'm going to point out some of the key things that makes it so hard, because the education is going all in the wrong direction. Because you're not studying at Harvard, you're studying at some weird community college by a professor who himself has never done the thing he is teaching. Does that make sense? You need to be very, very careful on where you're getting your education from. I know it's on the internet, but not all information on the internet is accurate, right? So there's a lot of information all around the place, right, coming at you. Supported resistance, trend lines, supply and demand, and structures, and all that kind of stuff by some guy, probably some teenager who's just got into trading himself, and he's like, I'm going to become a YouTube star. And he has no knowledge of trading whatsoever. He's in his hat, tilted backwards, and saying, bruh, let me teach you how to trade, bruh. And you're like, well, you just have to take a moment and think about it. Like, a surgeon takes years to become a master at his craft. You have to learn from someone who spent years giving up their hair color to become a master at their craft. You need to learn from them. It's as simple as that, bruh. Let's take it further now. One of the things that you want to understand with trading is, let's say you're given a strategy, and in your strategy you have A plus B is equal to C, okay? It means when people look at a chart and they see this upward movement, many people are taught this logic of, oh, you know what you need to do? You see these things that stick out on the bottom? Take a line, you can, if you want, you can take a crayon from your kindergarten nephew, and you draw that line, and once that line gets violated, then the line is A, the violation is B, and then C is the action. Then what you do is you let the price come up a little bit, and once it comes up, you sell. That is A plus B is equal to C. Very linear way of thinking. Does that make sense? All right, here we go. Now, if in that same process where we were saying, whenever there's a break of the structure, they say prepare to do a sell. That means here it says it's becoming a sell. What about this situation? What if I do this downtrend line that was violated, and it's saying, oh, that means it's a buy. Whatever the sellers were doing have been killed, and therefore it's a buy. And this is a very small picture in the buy that's in play. I'm going to take this and make it even easier to understand. Let me put you in this situation right now. Let's say prices are moving in a similar fashion, okay? All of you guys in this room, there's like 800 plus people in here and counting. All 800 of you guys have gotten the information. You've done the knowledge. You guys are all Harvard PhD graduates. You've done all the research and analysis. You're like, oh, top of the game. And you saying, this is going to be a buy, and hardcore buy. One thing, when the prices go up, what do many people feel? Those who didn't get in. Those who didn't get in. The ones who did get in, they're making some money. They're like, yeah, baby. Woo! They're making money. But those who didn't get in, they're like, crap. These are not small-time people. These are, I'm telling you guys, all of you guys are proper graduates. You guys are smart. You guys are intelligent. So you guys won't chase it. You won't buy it up there, right? Will you buy it up there? You will simply say, I missed the trade. However, if it gets me a better deal, I'll buy it. All the people, let's say 100 of them didn't buy yet. 700 did. 100 of them like, ah, man. Okay, if he comes down, I'll buy it. So what they're doing is they're waiting for this. They're like, come on down, man. Ah, here we go. Here it's coming down. Ready for this aha moment for you guys? Those 100 people are now starting to say, yes, We're gonna buy it. It's coming back. But what are the people doing A plus B is equal to C doing? Look at that line that got broken. Prepare for sell. So the unknown people are doing their sells without knowing someone is gonna buy their sell and take over.
Now, are you curious about the exact strategy Navin has been using to approach the markets? The Mastering Price Action course reveals all of that. In that course, you're going to understand the logic behind each price action movement. And from that, you will be able to take your trading to the next level by having a much more solid understanding of the markets. And because you're a subscriber, just click on the link in the description below to access our exclusive discount. Time to take your trading to the next level. All right, let's get back to the video.
One clear thing I want to tell you guys that you always should stay away from is stuff like this. Markets are moving and you're saying, okay, you know what? I need a good price and I want to buy it also. So you're waiting for a nice, deeper enough price, whether you're trading Fibonacci style, whether you're trading support resistance style, whether you're trading supply and demand style. Whatever it is, you're waiting for a discounted price. So far, so good. You're waiting for, if this is $1, you need prices to come down to 50 cents so you can say, cool, then I can buy more. If it's 50 cents, I can buy more pieces. And when the prices go up, I can sell those pieces and make money. But if you buy it here, you need the price to go to $1.10 to make money. That becomes harder. So here's where the logic's going to come in. And this is where you need to understand this very, very clearly. Ready? Prices are moving sideways. You know, based on your research, it's a buy. Okay, whatever the technique you're using, you know, based on your research, it's a buy. The market jumps up and you're like, I didn't buy it, but I knew it's a buy. And for some reason, something kicks inside of you and says, oh man, that is my research. That is my analysis. It's you buy it here. Now, then while you're in that position over there, you attend a webinar by Urban Forex and there's some brown guy screaming at you saying, do not buy in those type of areas. You know, he's screaming out of his lungs and you're like, there's a brown guy screaming at me, but I'm buying up there because I know it's a buy. It should go further. So far, so good. Everyone has this logic of, yeah, but I don't think it's pulling back. It shouldn't pull back. He should go further. He should go further. Now that logic is correct. Let me ask you one thing. All those people who bought here, who bought it there, everybody who bought it there, what do you think is going in their mind? Are they happy or sad? They're happy, right? They're very, very happy. They're like, good, we're making some money. But the further it goes, higher and higher and higher, tell me, you yourself, if you were that person buying from here, will you not think, let me at least take out some money. Let me remove at least my initial investment. Let me close some profits. They have a tendency to start taking action. They have a tendency to start taking action. If they start taking action a little bit, the prices move down a little. If they take action hard, the prices drop faster. Let's take it a step further now. So everything you think of needs to come with the context. Let's take it a step further. Prices are coming down. Then they start pulling back into a discount. So let's say I want to be a seller. They start pulling back. Like, oh, sweet. I want to get ready to sell. This looks like a pretty decent discount. All right, let's see what you're doing. These guys are early. I understand that. And there are many people who didn't get in, like me, saying, okay, I want to also sell, but give me a better price. So the way it's coming up, I can judge how much is he closing at this area. So I know this is the area where they all decided to close a little bit of money. So I'm aware of that area. That is in my view sight. I'm aware of how he's coming back. Now the cells activate. They're going down. They're going down. They're going down. And it does this. What just happened? All right. That means they're cashing out more again. But I got involved in these areas. I sold. But they're getting involved by removing some more money in this area. Okay. Okay. Keep that in mind. Keep that in mind. Prices are going up, but they're going up slow. They're going up slow. They're going up slow. And then it comes down hard from this area. Hard. Same spot. same spot for that discount guy, my type of people hit it for a sell again. Now, what is happening to the structure? What is being developed here? It's a range, right? But do you know what a range represents? Rather than just memorizing it like a parrot. You know, a parrot just memorizes words and just repeats it, but the parrot has no idea what he's saying. You don't want to be a parrot, a Forex parrot, right? You want to know why things happen the way they happen, okay? So as prices are responding from this area, prices are going down. They're still not going down through. Now, ready? They buy it again. Now, can you all tell me what is the process of a range? How do you trade a range? Sell from the top, buy from the bottom. Correct? It's not magic, because I know the training that's out there. Sell from the top, buy from the bottom. Right? So here is the sell areas. Here's the buy areas. Did you know there is a condition that when you're looking at it, you're like, this seller, after the discount, is still holding on. Did you know when they're cashing out on the bottoms, when they're removing some money, they're not removing so much? Once it comes here again, if you see this, what's happening? For a normal technical analysis person, he'll say, oh, that's a range inside of a range inside of a range. I get that. I can see that also. But what is happening? What's the context? They're no longer removing money anymore. Crazy, right? When they're no longer removing money, your chances of the drop increases. Ready? Here we go. I'm about to blow your minds in the next 5 seconds. Ready? In this process, when you have a structure break like that, and people are telling you, well, you should buy it because the structure has been broken, you're at support from the bottom of the range, you should buy it. Technical analysis says buy. We have confluence. Two things agree with the buy. That buy didn't work. Died. You know why he died now. You know the context of things. Ready? Next piece. So we got structure break type of people in trouble. It's not working for them. We've got range traders in trouble, buying from the bottom, not working for them. But it's a range. It's supposed to work. It's not working now. But if you're reading it left to right, piece by piece, and you're taking in all the information, you're like, I'm not lazy. I understand. I can process this information. I don't need to just put a line at the bottom and says, if it touches that line, I buy it. If you do it that simply and you expect to go buy a Ferrari where a person spent years developing Ferrari to the perfection, you know perfection cannot be sold so simply. Now, so let's take it a step further. So that was the thing that you guys were looking at, was this piece. Let's bring in a little bit more of why does this happen? Let's answer that, because without answering that, you won't know what this means. You need to know the why. So let's say there is a resistance here. Resistance is a barrier up ahead of us. So let's say there is a level here and a lot of you guys bought. Okay, not all of you, but a lot of you guys bought. Prices are going up very, very hard, and you see these things along the way. You're like, whoa. Looks like they cashed out, but they wrote it again. Tell me what happens in this area here. Was he able to make a higher high from this point? Did prices go higher than his last attempt? We're approximately near the resistance. We don't need to be exactly. We're in that vicinity. Did we make a higher high? No. I want you to all first understand one fundamental reasoning behind this is, do we need to touch this line? No. We do not need to touch that line because everyone's price point, everyone's drawing style is slightly different. So far, so good. We're not making any higher highs. Prices are coming down, and every time they came down, they would buy it. Who would buy it? The guys on the sidelines who didn't get in. They're buying it. But every time it goes up a little bit higher, they cash out. It goes a little bit higher, they cash out. Okay? Now, we are approaching what looks like a range in context of a resistance above our head. So now I want you to think cosmic. What I mean by cosmic is you know that there's a range, but that range is within an uptrend. But that uptrend has reached a resistance. You're now becoming smarter. You're bringing in all the pieces of information that you're catching, and you're like, all right, what does it mean now? What does it mean now? What does it mean now? You see what's happening? You're not simply looking at this range and saying, oh, I know how to do a range. You're coming outside your comfort zone and saying, I can take in, absorb all that information. I feel it. I can see it. All right. Now, prices start to move up a little bit. They're at resistance. Prices come down, they break the level. What happened to the buyer? Let's go piece by piece. Piece by piece. What happened to the buyer? Okay. The buyer looks like he's quitting. The buyer looks like he's quitting. The next candle comes up and everyone's thinking, I need to sell, 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 sell. Next candle comes up, goes back inside the range. Prices hang around a bit and then they fly up. Now, I want you to tell me up until this point, was anyone expecting that buy? I'm going to bring you the context now. So you need to be aware of these things. What if I just draw one piece? What if you were in a range like that? This is the top of the range, which is resistance. This is the bottom of the range, which is support. What just happened by going sideways up near resistance? We just talked about this in the last example. If you were aware of that, this would make more sense for a buy, wouldn't it? If you're unaware of that, then we would all chase the sells. Just having a little bit more information can change everything. This is the core fundamentals of you trying to understand, where do I need to position myself to make the most amount of money? I'll throw in lots of examples left and right with charts and everything, so that way you guys can really take in and soak in that information. But the whole goal is, how quickly can I get you the right information to get you to where you want to be based on your dream? That I'm telling you, do not abandon the dream. The dream is correct. The information coming at you might either be wrong or might not be so simple to understand. Okay, that's what we specialize in at Urban Forex. Our job is to make hard, complex things be taught easier, but verified information. It cannot be some jagged technical analysis that you can pick off the shelf in a library, okay? Because that doesn't work. You know it doesn't work. I've proven to you right now it doesn't work. So once again, as always, thank you again for being here. It's always a pleasure. You guys have taken time off from your busy schedules to be here. I will never take that for granted. So thank you guys for being here. It's always been a pleasure. Until next time, guys. Thank you. Cheers. Bye for now.